Hi, and welcome to this week's look at the major news stories, or at least some of them, that have affected the market so far. And this week, unsurprisingly, with all the interest rate announcements coming out, we're going to focus on that area and the effects it's having. And we'll start with the S&P500, that's set a new record high. Then we're going to take a look at what happened to the dollar against some of the major competitors and pairs in the market. Thirdly, we'll take a look at what happens when a central bank does cut rates, and particularly, we're talking there about the Swiss National Bank and the Swiss franc. And we'll end up with a little bit on Tesla and what's been happening there in the last few days. So, to start with, the S&P500 has set a new record high. We spoke last week of the S&P and the fact that it was showing some positivity, and we may well see an attempt to overcome the resistance at 5,200. Well, that happened. And inflation data and interest rate data was the main driver for it. So Wednesday, the Fed held rates as expected. That was no surprise. But market participants now are paying more attention to what's being said about the decisions rather than the decisions themselves. And there was quite a dovish tone from the Fed. We are now looking, they're saying, at 3 rate cuts by the end of this year. Now, back in December, we were talking about 4, but there seems to be, whilst that number's fallen from 4 to 3, there seems to be a lot more clarity about what to expect. In fact, Jerome Powell said that inflation data was hotter than expected, and that overall, the story has not changed. It is a gradual reduce in inflation along a somewhat bumpy road. Whilst that may seem like monetary policy will stay tighter, the FOMC sort of projections were for 3 cuts by the end of this year, and people are taking that on board. So what happened? Well, as a result, we saw a little bit of weakness in the dollar, which we'll come on to in a minute, and we saw the S&P500 soared to a new high of roughly 52.50. Now, if we take a look at the chart, what can we see there? Well, the market continues in the upward trend. That's the blue channel that you can see on the chart. And the price is, in fact, in that upper half of the channel, which is a sign of increasing demand. However, worth noting, the price is near that upper border, which could make it vulnerable to a correction from its historical top. In fact, we saw a similar pattern has formed more than once in 2024 so far. Support, of course, can be provided by the median line of the channel and the lower border. Again, quite important levels. The 5,200 level that we were struggling to overcome previously could change its role from resistance to support, as was the case with the 5,055 level previously. So it's certainly been a good week for the S&P 500, and probably to say the thing to take from it is not the actual decisions, but what's being said around those decisions is what seems to be counting now. Okay, so we've seen what the decision and the rhetoric around the decision did for the S&P, but what about the US dollar? Well, the yen and the European currencies strengthened after that Fed meeting. The dollar did okay towards the start of the week, but after that rate announcement and, as I said, the importance of what's being said around it, we saw some dollar weakness. That clear indication now of the FOMC forecast of 3 cuts, probably consecutive this year, and potentially another 3 in 2025, saw some selling of the dollar begin. If we take a look at, say, the Great British Pound against the dollar, we had some weak data on inflation and the producer price index in the UK earlier the week, and that saw the price fall below the 1.2680 level, but recovered quite quickly off the back of the FOMC meeting and tested again 1.2800. Now, Thursday is going to be a big day, particularly for this pair, as we have the Bank of England rate decision coming out. Clear expectation of a hold at 5.25%, but it's going to be the votes behind it that are going to be the most important thing. If we're seeing perhaps greater than 1 vote for a change for the next meeting, we may well see the pound against the dollar decline to the 1.26 to 1.27 levels. If not, if it remains at 1 or even in fact no votes for change, we could see it increase further to 1.29 to the 1.30 sort of range. So as ever, this information is going to be really important, and we could well see some volatility in the market. Take a quick look at the euro against the dollar. Well, that increased by over 100 points after testing 1.0840 and strengthened, in fact, above 1.09. Now, technical analysis shows that if it continues to strengthen, we may well test the 1.10 to 1.11 range. Again, some data coming out from Germany. We've got the PMI, also due on Thursday, so keep your eyes and ears on that and expect a little volatility. Now, if we take a look at the dollar versus yen, well, the big story here, of course, is negative rates are finally ending in Japan. So the dollar yen went above 151, but didn't really gain a foothold there. And if dollar sellers do manage to start a downward correction, the price on the chart may drop to the 146 to 148 range. Also out of the States on Thursday, we've got manufacturing activity index from the Philadelphia central bank. That could be a bit of a key driver for this particular pair. So all of this data coming out, all the arguments around the data coming out, be prepared for volatility and don't forget your risk management techniques. Okay, so a little bit of a change here. We're going to take a look on what happens when a rate cut actually takes place. Dollar against the Swiss franc, and the Swiss National Bank decision has broken a multi-month trend. Well, the S&P, quite unexpectedly, to be fair, decided to cut rates to 1.5% from 1.75% early Thursday morning. Previous month, 1.75%. And the expectation was for it to remain there as well. In January, the World Economic Forum, the head of the SNB, Swiss National Bank, Thomas Jordan, told the press that the appreciation of the franc, the Swiss franc, caused problems for exporters. So clearly they prefer a bit more weakness in the Swiss franc. In fact, the Swiss franc has fallen 6% since January versus the US dollar, and this cut has further weakened the franc, as we would expect. If you take a look at the chart, that shows that we're breaking the downward trend that's shown by the red channel, and that trend actually dates from sort of autumn or fall of 2022. Price may well continue to develop in the channel that's shown in the blue lines, which we can see is a bit contradictory to what we've been seeing since the autumn of 2022. In case of a rollback, 0.888 may well provide some support, which was former resistance and along the lines of that lower blue line that we can see. However, if the weakening of the franc continues, we may well see 0.9095, where the market has previously repeatedly formed reversals. So it's going to be an interesting sort of few days, week ahead for the dollar and the Swiss franc. And most importantly from this story, I think, is really that easing of monetary policy by the SNB is likely going to serve as a big example to other central banks in the westernised countries, and could well cause us to see some new trends developing and emerging in the foreign exchange market. So really the first rate cut that we've seen so far in 2024, and one that wasn't expected, lo and behold, has led to some Swiss franc weakness. Okay, we're going to end this week with an old favourite, and that's Tesla. Quite a lot of analysis on Tesla been available lately via our website at FXOpen. But the Tesla share price is actually above $170 again for the first time for a while. But how long will it last? We saw the low of the year back on March the 14th. We have recovered there, back above the $170 per share, and that's mainly off the back of news that Tesla's going to increase its prices of its electric vehicles in the US and in Europe. So a little bit of a lift, a little bit of a boon for them from that. However, it's fair to say that the Tesla stock price is still under pressure and is noticeably performing worse than the S&P500, for example, which is always used as a bit of a comparison. The price, if you look at the chart, is forming a downward channel, which is shown in red. Goldman Sachs has cut their forecast from $220 per share to $190 per share for the next 12 months, and that's despite these price increases. And Yahoo are reporting that Musk is beginning to be identified as a bit of a problem for some investors, who are saying that, perhaps a change, get a more realistic CEO in place could well help the Tesla share price. Obviously, Elon Musk involved in suing OpenAI, for example. What about the outlook then and moving forwards? Well, if we're looking for sort of bullish signs, the price is near an important support zone. So that could be quite key. a fall in price below that lower border may create oversold market conditions in the short term, which again may well lead to a slight rise in that price. Fortune is reporting that Cathie Wood's funds have bought $35 million worth of stock at recent levels. So again, a lot of people take that as a positive sign. A great performing fund buying a significant holding in Tesla. The flip side of the coin, of course, what are we looking at and what sort of bearish signs are we seeing? Well, the bearish gap of early January seems to be working as resistance and may well continue to do so. We've also got that psychological level of $200 and the median line of that descending channel, which could well offer some further resistance to any further increases in price. Barron's writes that the next reporting season is possibly the biggest risk to the Tesla share price as things stand. Now, the expectation was for 480,000 units delivered in Q1. And that was pretty much an industry-wide expectation. But in the last couple of weeks, some more revised expectations and estimates have come out, and they're looking at falling to around the 430,000 units being delivered. That's quite a significant drop-off based on that previous 480,000 figure. So things are a bit up in the air for Tesla at the moment, not performing as well as the S&P500. Some buyers there, but some sellers as well. Estimates falling. That news release is expected on April 17th, so we could see a little bit of choppy action between now and then, but it's fair to say those figures could be really important for Tesla moving forwards. Anyway, we wish you luck with your trading in the week ahead. Bye for now.